Should you have a bear market strategy for investing? I don't know. It's a difficult question for me to answer on your behalf. So it's very simple that if you are anyway doing an SIP, you shouldn't bother because the fund manager is already doing it. Don't stop the SIP because you think the market is going to go down, or you think, oh, the market is going to go down, so I'll stop my SIP and start after 3 months. Immaterial where the market is. So take a time stoppage or a PE stoppage or a market stoppage. You want to do that, I think it's very risky because emotionally we will not be able to do it. Therefore, for people like this, you have something like a balance advantage fund or a multi-asset fund saying, I do not know how to time the market, I do not know what to do, but I will do an SIP in the multi-asset fund, or I will do an SIP in a balance advantage fund, where the fund manager has a choice of where to put the money continuously, right? So let the fund manager decide. However, if you have bought some shares which was, let's say I am taking the share price to be have been at 1400, and you decide that here is a bear market strategy, in the sense that you say, okay, I bought the share at 1400. I thought the PE was fair, but I realized that the PE is too high, and in a bear market this PE will not sustain, so I will sell off the share, move into cash and buy it later at a different price. That could be one strategy. It's not a wrong strategy, it's not a right strategy. It works for some, it has worked for me in some shares, it has not worked for me in some other shares. But let us assume that my bear market strategy is I mean, this is learning again from the March 2020 episode, is to say every time the market falls by 5%, I will buy one more share, right? So one more share because 1% I am buying more. Let's say I've got 100 shares. Let's say the share price was 1400 rupees when I bought it. I'm not even naming the share, so it doesn't matter. The share price was 1400 and it had a high PE, but I had already entered. Then I realized that the PE is high and it won't sustain, so I sold off all the shares. That could be one strategy. The second strategy is what I'm going to explain, is how for every 5% fall, I increase the number, my stake by 1%. So I have 100 shares. I buy one more share. So 1400 was the price, 5% it fell. That 5% I calculate and hold it constant. I don't monkey around with that 70 rupees, right? So when the price comes to 1330, I go and buy one more share. It falls another 70, it comes to 1260, I buy another one more share. So 1260 and falls another 70 rupees, that 1190, I buy one more share. It comes to 1120, I buy one more share. It comes to 950, I buy one more share or two more shares. Then it comes to 900 or 890 or something like that, I buy one more share. So some industries you don't understand, some companies you don't understand, some business models you do not understand. Nika, I never understood the business model. There is a question of getting into whether the price was fair or not fair. If you don't understand the business model, you're just out of it. There is no question of me chasing a business model because I don't understand it. I don't understand it, I don't understand it. I stay out of it, right? So, but I understand what a HDFC Bank does. I understand what a Nation Paints does. I does what a HDFC Limited used to do. I understand what a Supreme does. I understand what a Coromandel International does. So Coromandel International, Eddie Perry and all our shares which I played on the way up and played on the way down. Again with the rule saying I will not buy more than 1% of what I already hold. So let's say I hold 30,000 shares, I will never buy more than 300 shares at a time. That's what I can. So I will buy 300 by the time it falls, say 5%. So about another 1500 shares, and then when it goes up, I may just sell this off and say, no, that original 30,000 is my investment, this was my trading. And on the way down, on the way up, I may sell 300 shares. Then if the price goes up, I may sell another 300, then another 300. So 5% if I have sold, then I will stop and say, look, something is happening, the valuation is fantastic, I'm still having 28,500 shares, I have no regret about the 1500 shares that I've given away. But if I were buying, it would be again 300 5 times. So now I have 31,500. I will wait for the market to go up. If it goes up beyond the price at which I think it is fair, I'll sell off. But I may sell off even earlier, saying, okay, I'm making some money in these 1500 shares, my 30,000 shares are untouched, so these 1500 shares I may sell. So each person can have a completely different bear strategy. So being prepared for the bear strategy and saying how we are going to react, I've done videos on that, and then having a bear buying strategy, all this combination is what will give you good returns in equity over a long period of time. And for each share you could have a different strategy, but please write down your strategy and make sure that you're implementing it exactly as the way you thought it should be, and not make a mistake saying this is what I thought and this is what I did. To reduce that gap between what you thought and what you did, writing down and monitoring helps. So you do all this, then it won't matter whether we are in a bear market, whether you are in the bull market, whether the market is about to crash. If you are ready for it, if you're prepared and ready for it, that's what will work, not when the market will crash and whether the market will crash. Irrelevant questions, completely irrelevant questions for which nobody has an answer, and even if they have an answer, they don't have an accurate one. So have your own strategy, write it down, implement it. Thank you.